All right. Hey guys, welcome back. I wanted to do two videos, one on market cap, one on toxic dilution, stock dilution, and toxic financing. Both of these things are pretty basic, kind of day one stuff that you should know, but there's quite a few people that don't know. So I just want to run through it real quick. The reason being is um, someone messaged me today. It's not the first time. It's not the last time. We were talking about different stocks and share price came up, and they said, "Oh, I'm looking for some stocks under $20 a share. Something that I want something that hasn't taken off yet." And I kind of chuckled myself for a second, and I was like, okay, so just FYI, share price doesn't really matter. So when you're looking and comparing stocks, and you look at a stock that might be $100 a share, you'll see some stocks are $1,000 a share, some that are $1 a share, and everywhere in between, right? Um, the It doesn't matter. What matters, and when you want to look at when you looking at a company and particular investment, what you want to look at is market cap, and it's very easy to see. I'll pull up another stock here because this is my second video on toxic financing. So if you're just pull up a stock for in this instance, it's MULN. You'll see here it has a $46 million market cap. That's not very much at all. More on this in my second video, so track with me here. So that's how you would just see it. It's a very well known. It's one of the first things you'll see is a company's market cap. So don't look at the share price, look at the market cap to see where a company's valued. For instance, if we look at a company like Microsoft, it has a $3.09 trillion market cap. So that's considerably higher than Mullen. Now, how do you get share price? Okay, so this is how share price is calculated. The formula is market cap divided by the number of shares outstanding, and that's what gives you the share price. Okay, and that's why we can look at market cap and we can see, okay, what is this company valued at, and that's why it's a better marker than share price. And I'll show you what I mean here. So here you have company A. All right, they have a $1 million market cap, and the formula is divided by, they have 100,000 shares outstanding, so that comes out to $10 a share, right? And then you have company B, who is only has $100,000 market cap, divided by 1,000 shares outstanding, and that's $100 a share is what you would get for that. Now, someone might look at the $100 a share and think, "Oh, that's super expensive. I don't want to touch that. That looks like that doesn't look like a growth stock." When in reality, this company B is valued less than company A, even though the share price is 10 times as much, because share price doesn't mean shit. Okay. In the grand scheme of things, I'm talking about here, it does matter when when you take options into consideration, but that's neither here nor there for this. So that's why you want to look at market cap and not share price. So again, look at that market cap. If you're looking for a growth stock, something that is that hasn't taken off yet, then yeah, you maybe want to look at something with a lower market cap is what I'm getting at. If you want to look at something, that's a well-established stock, then you could look at something like, with a higher market cap, something like Microsoft has a $3 trillion market cap. Something like MULN has a smaller market cap. Now, I would never invest in MULN, and if you check out my next video, I'll tell you exactly why.